We are starting this show with a very special name, Pulak Prasad. But who is Pulak Prasad? One of the respected market guru, founder of Nalanda Capital, who has a net worth of approximately 27,000 crore. His fund has been consistently generating 19% of return over the last 16 years. Nikunj, it is very imperative, very important to know your circle of competence and the art of saying no. And Pulak knows exactly when to say no. No matter how tempting the situation may be, he uses certain filters to make decisions. What are those filters?
So Priyanka, Pulak is someone who's a student of markets and a practitioner of history. Pulak simply follows a very simple concept that rule number one, it's a rule from Buffett, you should not lose money. Rule number two, you should not forget rule number one. So Pulak in a sense has a big filter. Imagine, I want our viewers to imagine there is a filter, a funnel in which you have a filter. And Pulak uses a strong filter to say no. When I say no, the ability of big investors to say no to whatever comes their way, I think is far more important in their ability to say yes. And history has taught us that if you are able to reject the companies which are outside your circle of competence, which is businesses which you understand and business which you don't understand, and as long as you know that what you understand and what you don't understand, you essentially are in a position to reject those ideas. Also, Pulak has said that yes, when you are saying no to almost everything that is coming your way, you may be missing out on what could have been a multi-bagger. But his ability to say yes to what he understands gives him this edge. And there is a data point which he has shared, and we'll put it out, which is that if you make far less mistakes and if you stick to what you understand, your ability to generate superior returns on a longer period of time, I guess, is far greater. Because when you understand a business which is part of your COC, which is circle of competence, you can really ride through the ups and downs. You know how to value the business. You know that as the disruptive forces of competition, disruptive forces of macro, disruptive forces of globalization will hit the business of that company, on what end that company in a sense would come. What looks like a connected world today may be a disjointed world. And COVID has taught us that world can change, but as long as you understand that business, which will only come with the knowledge and your ability to understand the competence of circle, you will take few, but you will take less bets. So your ability to say no gives you this edge, which Pulak has said, where you will be able to filter out what you don't know. Occasionally you will miss out some names. Occasionally you may miss out some multi-baggers. But what you buy with your understanding will give you far greater edge than unnecessary diversification. It's very simple. Pulak applies it, and Pulak has always said that, look, he's taken a lot of cues from Warren Buffett. Warren Buffett has always said that we don't believe in buying stocks. We believe in buying businesses.
Sure.
We like to be partners with great managers. And I think that is what Pulak has, in a sense, very clearly articulated in his book. As a policy, Nalanda does not talk to media. So when we structured the show, this was perhaps based on the book.
Yes.
And also some private conversations we've had with folks who know him and brokers and firms who've serviced Nalanda as a firm. They believe in owning business permanently, which is that if it's a business, we would like to own or become shareholder of the business, in this case partner, permanently. We are not equity investors, which is equity investors, they time the market, they are looking at owning an asset class, but in this case Pulak has said that we try to own the business as a business owner. Then the importance of high quality at a fair price. And this is something which I think over the years I think that has the definition of quality and the definition of price has changed. There's a time when Buffett used to follow what could be called as the Benjamin Graham kind of an investing, which is that buy a company which is below its intrinsic value. But I guess Pulak follows what Buffett has started following after he met Munger, which is that buy a company at a fair price, but buy a high quality business when there is blood on the street. And there are empirical examples of that how does he define quality and how does he define fair price. Some pointers are there on the screen.
If you like this video, then like, share and subscribe to ET Now.